So when y'all invest, I think it's pretty interesting because you guys say that you actually do look at pre-seed and Series A, and I think historically speaking, we've talked about this a lot on the podcast, but there used to just be this vacuum, this void in the market for early stage capital in oil and gas, and it started getting a little bit better with your Cottonwood Venture groups, those types of VCs, but even those guys, they look at Series A financing. When y'all look at pre-seed financing, what do y'all look for in companies? I mean, are you looking for companies that have proven that they can monetize and generate revenue, or are you looking for pre-revenue companies as well?
Yeah, especially with you guys seeing so many companies.
Yeah, I think I think everything matters. We tend to like software more than hardware, but actually one of our portfolio companies here in Houston is Rugged Robotics, and they have a hardware component. So we tend to like software, but we'll invest in hardware as well. In terms of what matters in the investment decision, unfortunately, I'm not on the investment committee, and sometimes I feel they're gatekeepers versus helping me get certain Houston founders invested in. I say that in jest. They're great. They're great partners.
In case you're listening.
But the team matters, the problem they're solving, whether the problem has, applications to other industries beyond just the oil and gas industry. If you talk to Malad, we like to, because our corporate partner network is over 400 companies like McDonald's, FedEx, ExxonMobil, BASF, Pfizer. Like we've got some really great corporate partners. So we write small checks. I think the average check size is something like 150, 200,000. We don't take a board seat. We never lead rounds. So we're passive, and we're just a small line item on the cap table, but we can be very useful to certain startups that have applications across multiple industries. So enterprise software tends to be something, we like investing in. And so we can, for certain companies, we can be a very strategic, investor.
Yeah, it's interesting that you say that, the check sizes are 150, 200K, but y'all don't take a board seat. It sounds very passive, but then you have just this whole back end of resources, whether it's, taking a technology that's servicing Exxon, it's like, oh, hey, this could also be applied to, Boeing or some other industry partner that you guys may have. That's extremely valuable for startups.
Yeah. And we do a really good job of keeping this Chinese wall of so if one of our if we make an investment, that doesn't mean that the portfolio company will automatically get into the accelerator program. And just because you're in the accelerator program, that doesn't mean we'll make an investment. So both sides kind of operate independently. But, just as an example, in March when, the world fell apart, our ventures team shifted a lot of our activities from sourcing and meeting new founders to portfolio support. And that would have been things like just talking to founders, seeing how they can extend their runway. We have a big marketing side to our business as well. So we ran a lot of webinars, et cetera, to maximize their exposure in our corporate partner community. Yeah. So we try to be very helpful to our portfolio companies, as well as just any startup that we know. Again, we don't charge any fee. So if, for example, we don't make an investment and we don't have a startup in our accelerator program, we're still willing to make those, introductions to our corporate partners through those private deal flow sessions.